Hi everyone, I am Susie Lyon with Hello Switzerland to talk to you today about tax. Now we all have to do tax. It isn't the easiest subject to talk about or to get your head around, and moving to a country and not speaking the language adds that extra stress to deal with your taxes. If you are new in Switzerland and you're wondering about tax season, this is the webinar for you because we are going to discuss that exact subject today and hopefully get some clarification around the very, very difficult subject of tax. Make it a little bit easier for you. We want to put your minds at ease this tax season. So we're speaking to Karen from Xacho. She has extensive experience and we're confident that after this chat, you will have more certainty and courage in dealing with tax inquiries. So I want to tell you a little bit about myself. I am a podcaster, an ex-police officer, a stay-at-home mum of 2 kids, and I have lived in Switzerland for 7 years. Being an expat in Switzerland is awesome. I absolutely love living here, and my little family have really settled into our lives as English-speaking expats with a little German here and there. This webinar is brought to you by Hello Switzerland, and its aim is to answer the main questions that you might have about submitting your tax form. So let's hear from Karen. Welcome, Karen. Thank you for joining us.
Thank you, Susan. I'm very happy to be here, and I do hope we can make tax a little bit less scary for everyone. The aim of this webinar or this podcast is really to cover taxes for people who are new to Switzerland, who are not Swiss, not speaking the language, and have probably a number of questions around what to do, when to do it, and it's really to cover these first basic questions for people who are new to Switzerland and are looking into filing a Swiss tax return for the first time.
Tell us a little bit about yourself, Karen.
Okay, thank you. So yeah, my name is Karen Verheijen. I am from Belgium originally, but came to Switzerland now a bit more than 20 years ago. So I originally from Antwerp and moved to Basel in Switzerland with my employer at that moment, which was PricewaterhouseCoopers. And that was initially for a 4-month project, but I actually loved it so much being in Switzerland that after some back and forth discussions with my husband and my family, that decided to stay in Switzerland. And now 20 years later, we're still here. But actually, now almost 80 years ago, we decided to buy a property in France, so just across the border from Basel. And we're living there now, so I'm one of these famous frontaliers or cross-border commuters. So combining French taxes and Swiss taxes is even more fun than just Swiss taxes. So I can also talk about that, but let's focus today on the Swiss side of things. So hopefully we can answer your questions there.
That's so interesting that you're not only an expat from 20 years ago, but now you're even doing that thing that's a lot of people have to do, cross over the borders, have to deal with all of the permit side as well as the tax side. So yeah, you're quite extensive experience in that regard.
Yeah.
So yes. Let us know a little bit about the company.
Yes, so I'm one of the managing partners at Xacho. Xacho was founded a bit more over a year ago now, so we're still a new company, but me and also the other partners in the company, we're not new to the topic or to the Basel market or to the Swiss market in general, because we all have a Big Four background. So I already mentioned PricewaterhouseCoopers, where I spent quite a lot of time. I also worked 7 years for Deloitte. And so a year ago, I then joined Xacho, which was founded by 2 of my colleagues by then. So we in Xacho, we are really focused on providing what we call employer compliance services. We basically are focused on helping companies with all the tax, social security, pension, payroll obligations and reporting formalities for their international employees in Switzerland. So when a company has someone who moves from the UK into Switzerland, there are a number of things to do, also immigration, taxes, social security. So that's from the employer perspective, which is our focus. Next to that, we also provide services to what we call individual or private clients, so which is more around helping them with their tax return preparation, but also questions around their social security status, their pension situation in Switzerland and also from abroad, with transferring money from a pension fund abroad into Switzerland, the planning around it. When you leave Switzerland, what do you do with the pension that you get out of it? So all these topics around, basically focused on the compliance side for mobile employees or mobile individuals in Switzerland.
And it's nice to hear that all of you and your partners have a real knowledge about people who are in situations like yours and mine, where we are maybe not Swiss born or have come here for either a short time or are here temporarily as expats, and that subject, it means that subject is really, really important for people to get their head around, but it helps to have somebody who understands.
Yeah, so next to me, as I said, I'm Belgium. One of my partners, he's Danish. Another one is Spanish, and we also have a Swiss person. So one of us is Swiss. So at the moment we have four partners in the firm, and we do indeed all have quite an international background. But at the same time, we're also all already quite a long time in Switzerland. So it's a combination of the both, so that you both have the international angle. Personally, that you know what it is to move from one country to another, with everything that comes with it, but also have the technical background, both from a Swiss side and from an international side when it comes to double tax treaties, international social security treaties, so all the fun part that comes with it.
And we all had to start somewhere, right? We all had to come as newcomers originally. So I think we can all sympathize with people who are new to Switzerland and have to navigate all of those very difficult things when dealing with being in a new country. So what are we discussing today? We're going to be discussing all things tax related to help newcomers to Switzerland. We want everyone to feel confident in getting their tax sorted without the headaches. So we're going to talk about things like what taxes are imposed on you as a resident, what income you must report and what you can deduct, what the process is and all the important deadlines, how the Swiss security system works, and what your work permit means for your tax residency. So should we get started, Karen?
Yes, please.
Great. So why don't we first cover being a tax resident in Switzerland? So let's imagine I've just moved here. At what point do I become a tax resident?
So if you look at it, what it really means in practice. So if you look at how the Swiss authorities look at residency in Switzerland, it's basically they regard you as a resident from the moment you basically move to Switzerland with the intention to stay here on a permanent basis. Permanent is not defined as how long it is, so it's more looking at the intention. And in practice, it really means from the moment you have a place here to stay, so you have accommodation available to you, and you register with the authorities. So you go to the town hall to register yourself as arriving in Switzerland. This is the moment that also from a tax perspective, you will be regarded as a resident. So there are other rules in the Swiss tax legislation that are mentioned also there, which is linked to then the number of days, the consecutive days that you have to spend in Basel to become a resident. But as I mentioned, the practice is really you register here, and from that moment you are considered also as a resident for tax purposes. So that also means that from that moment, you are subject to Swiss taxes on your worldwide income and wealth. We will go into that in a bit more detail later on. But it's important to understand that is really as of day one. So it's not like in some countries that you have a 90-day period or even a 6-month period where you can be non-resident. In Switzerland, is as of day one. Now it is also then if you arrive in the middle of the year or somewhere during the year, it's from that date. Although the tax year is a calendar year. So if you would say, I arrive now today on the 18th of March, you register today as being here now, then it's as of 18th of March until the end of December, so 31st of December, that is your first year as a tax resident. As of that, it's calendar year basis, of course, but the arrival year and departure year can be split years depending on your arrival date and your departure date.
So I am married and I have 2 children. What does that mean for my tax situation or somebody in a similar situation like me?
So in Switzerland, when you're married or you are in a registered partnership, you have to file a joint tax return. So it's not an option at this moment that you would file separately. So in Switzerland, it's always a joint tax return. It's even almost a family tax return, because if you have dependent children who are still part of your household and not over 18 years old, also there, if they would have any income or assets, will also be part of that tax return. So it's the income of both spouses and also the assets of both spouses have to be declared in one joint tax return.
Makes sense. There you go. So Switzerland is made up of a lot of cantons, 26 actually, and each has its own set of rules on taxation rates. And then on top of that, there's cantons that are divided again into communities, which are also subject to tax rates. And then on top of that, there's the federal taxes. So what are the rates that are imposed by these various tax authorities?
Yeah, so as you say, there are basically 3 levels of taxes. So when you have the federal taxes, so this is basically on the income taxes. So that's it's irrespective of then where you live in Switzerland. So the federal taxes are the same for anyone who lives in Switzerland. So that's one part of it. So the other layer is the canton. So the canton, as Susan correctly mentioned, there's 26 different cantons. So it's really depending on the canton where you live, what your cantonal taxes and how your cantonal taxes are calculated, and also both on how the income is determined, how the deductions are determined, and what tax rate is applicable is determined by the canton where you're resident. And then the last level is indeed the community or the communal taxes, which is depending on the community where you live. Very often the community taxes are a surcharge on the cantonal taxes. But again, this can vary quite a lot depending on the canton and the community where you live.
So the answer is it varies. There's no answer.
Yeah. In Switzerland, because sometimes I get the question, oh, what is an average Swiss tax rate? And it's you just can't say if you don't know where you live, what canton, what community we talk about, and even what level of income. It really, you can't even start with saying this is the average Swiss tax rate, because it varies. It varies, and it varies actually quite a lot depending on the canton and the community where you live.
So I've heard of some taxes that have been imposed on people that are completely different to those that we just mentioned, which is the canton, community, and federal taxes. Things like when I came to Switzerland, I was asked about my religion, and apparently there is a kind of religious tax. So there must be other things that are imposed on people living in Switzerland. Can you tell us a little bit about those?
Yeah, so there are a few additional taxes, which are, some of them are indeed depending on your status, on your age. The religion, the church tax, as it's called, is dependent on, it's really linked to your whether you register as having a religion, and that is one of the religions that where the church taxes are levied through the tax authority. So there are a number of religions that are working like that. So if you then have registered with having one of these religions, you will also be charged church taxes through the tax system. So, but next to that, as mentioned on the slide here, is also fire brigade tax. This is basically a tax you will get charged as long as you're not an active member of the fire brigade, and as long as you're below a certain age. It also depends a bit from the canton, but it's around, if I'm now going to throw it out, I think it's 40 or 45 years old. As long as you're younger than that and you're not an active member of the fire brigade, and it doesn't matter whether you're a man or a woman. The only reason why you wouldn't be or you would exempt as a woman is when you are on maternity leave. But other than that, they would charge you that fire brigade tax. But it's automatically charged as part of your tax bill. Then the other that are mentioned there, the gift and inheritance tax. This is of course only due when you would receive a gift or an inheritance. So that's an event-based tax, which in Switzerland is also very often, also cantonal determined again. Depending on the canton where you live, you might be exempt from that because there is an exemption for inheritance directly from parents to children or between spouses. So this is also important to check. And then another one that you might come across is the real estate capital gain tax, which would then be due when you sell a property and you realize a gain on that property. It can also be quite a substantial tax, so that's also why we mentioned that you're aware that this is something that exists in Switzerland.
It's an interesting one, the capital gains taxes, because when I purchased a home in Switzerland, they made it very clear when I spoke to the bank about the capital gains tax, even though we were buying and not selling, and selling might not come for many, many years. They said, this is really important that you understand this. So it is actually one that it can be quite substantial if you own a property.
It can be, yeah. Yeah, and I don't know whether you want to say something about the capital gain tax that is mentioned there as a second point. That capital gain is really when you, so it's different. Well, we have the capital gain on selling a property, so the real estate property capital gain tax. But where you also have capital gains that you can realize is when you, for instance, sell shares. So you have bought a share at 100, you sell it at 150, so you realize a gain of 50. And in Switzerland, this is not a taxable gain. So I think that's also important because in a lot of countries, this is also these capital gains are taxable. But in Switzerland, this is not the case. Unless, and there are a few exceptions, if you really realize a very high amount of capital gains and based on the frequency that you would be trading. And so there's a number of situations where then the authorities might say this is not just part of your normal management of your wealth or your assets anymore. So this is more like a professional trading activity that you have, and then it might become taxable income. But otherwise, if it's just the normal management of your investment portfolio, then it's not taxable in Switzerland.
So let's talk about payroll and our annual tax returns. At what point is someone subject to pay tax on their salary, on their pay?
Yeah, this is also an interesting thing in Switzerland. So it's not that every employee has automatically a payroll deduction through their payroll. That's very different than in a lot of countries where you just as an employee, you pay on a monthly basis, taxes are deducted from your salary. Like for instance, in the UK, you have the PAYE, you have the payroll taxes in a lot of other countries. In Switzerland, it's more like an exceptional system because Swiss nationals, so people with the Swiss nationality and C permit holders, they will not have any deduction of payroll taxes on a monthly basis. It's only for people that have an L or a B permit, where the Swiss employer has the obligation to deduct taxes on a monthly basis. So it's basically seen as a security tax. These are people that are less permanent in Switzerland, so that's where the tax authorities say, okay, they already deduct the taxes on a monthly basis. Because the normal system of taxation is through the tax return, that the taxes are assessed based on what you declare in your tax return, then the assessments are made, and that's when the final tax liability is determined. So that's a normal tax and tax collection system. So the withholding tax payroll system is basically, it's an exceptional system. But nevertheless, for people who are new to Switzerland, usually they have either an L or a B permit, so they will be subject to the withholding taxes through the payroll when they are paid by a Swiss employer through a Swiss payroll. And here as well, these taxes are determined based on the canton where you live. So even if you would say you work for an employer based in Zurich, but you live in Aargau or in Schwyz or wherever in a different canton, so it's basically the payroll taxes will follow the tax rates of the canton of residence. So that's also important to know. And then it is a rate is determined by the tax authorities, and they have tables, so you can also find all these tables online on the tax authorities' websites. But it is a different rate depending on the marital status. So you have a rate for if you're single, if you're married and your spouse's income. Married/registered partnership. So every time I say married, you also have to understand that registered partnerships are regarded as the same. And then it also takes into account the number of dependent children that you have. And in some cantons also whether you're subject to church tax, yes or no. So but that's also depending on the canton, whether they have a different rate, including church taxes or excluding church tax. And that rate is then applied on a monthly basis to your gross monthly income, and that's then the amount of withholding taxes that will be deducted through the payroll.
So it sounds like if you are on an L or a B permit and your taxes are taken straight out of your pay and it's paid directly at source, that maybe you don't need to fill out a tax return every year. Is that right?
Yeah, for certain situations, that's right, but it's not a general rule. So basically, the withholding taxes can be regarded as your final taxes when your overall gross annual income is less than 120,000 Swiss francs. So that's normal in most cantons. Geneva is a bit a separate case, so there is 500,000. So as long as you're below 500,000 on an annual basis in Geneva, your payroll taxes are final. But there are a few other conditions. So it also, if you don't have any other substantial income besides your employment income, or if you don't have really any assets that you would have to declare, then also for wealth tax purposes, because then you would still have to ask for a tax return, and you will still have to file the annual tax return. And based on that, then your overall taxes will be reassessed on what you declare in your tax return. But then, of course, the taxes you have paid through the payroll taxes throughout the year will be offset against your final tax liability. So it's more seen as a prepayment than as a final tax payment.
I like that, prepayment. So you've got a little bit of money there. You don't have to deal with the big shock at the end of the tax year in case you didn't put that money away. Then if you've got an L or a B permit, that's being done for you. So you did briefly mention about sometimes there's things to declare, and that was when you'd have to do a tax return, as well as assets. So let's talk a little bit about that. What does a person have to declare, and what are their assets that they would need to declare as well?
Yeah, in Switzerland, it's important to make a distinction between income and everything you have to declare for income taxes, and then the wealth taxes. So these are part of the same tax return. So your annual tax return is an income and wealth tax return. So on an annual basis, you have to declare both your worldwide income and your worldwide wealth, which are your assets, basically. So from an income perspective, it's basically anything you receive as income during the tax year for you, your spouse, or partner, and as I said, your dependent children needs to go into the tax return. So this is, of course, mainly your income from any gainful activity, your employment, if you're self-employed or retired. So that income needs to be declared, but also any investment income. So if you have interests on bank accounts or saving accounts, dividends on your shares that you have as investments. So that also has to be declared as income. If you have a property that you do rent out, so the rental income that you receive needs to be declared. But also, if you have a property that you use for yourself or basically are not renting out, so for instance, a holiday home in another country, and we'll come back to real estate abroad later on. But also, if you have, if you say you have a house in Switzerland and you live in it, also for that house in Switzerland, you will have to declare a rental income, which is a bit of a deemed self-rental income that you will have to declare. And in Switzerland, it's called in German Eigenmietwert. It's basically determined based on either the tax authorities determine the amount, or there is a formula based on which that you have to use to determine. But that's also, that income also has to be declared in your tax return on an annual basis. And then any other income, as I said, it's really any income, like if you have any social security benefits or payments, like invalidity or sickness payments. If you win the lottery, it needs to be declared. So it's all these different things need to go in there.
I wouldn't mind winning the lottery, Karen, I tell you. Don't mind declaring it if I win a few million.
Even paying a bit of taxes on it is no problem.
Yeah, exactly. So there are things that can be deducted from your taxes. What about those things that you can take off of your yearly taxes?
Yeah. Yes, you can deduct certain things. Now in Switzerland, a lot of the deductions are what we call standard deductions. So they're basically already determined, and you will get them depending on your situation, whether it's say, okay, because you're working, or because you have dependent children, or because you're married. So it's more linked to your situation that you will get these deductions. So you don't have to do anything for it. Well, you still have to kind of claim them in your tax return, but you don't have to prove anything. So you don't have to put documentary evidence with your tax return to say, oh, I have paid this insurance premium or something, that you don't have to do. But then there are a number of deductions, which we label as non-standard deductions, that you can also claim, but there you do have to prove that you really had that expense. And these are deductions like mortgage interest, for instance, when you have a mortgage loan and you pay interest. So these you can deduct. Gifts to charitable organizations are things you can deduct in addition, but also then contributions to a third pillar pension. So you have in Switzerland you have you can conclude an additional pension if private pension insurance, which is called the third pillar. So when you do that contribution can be deducted. Alimony payments can be deducted as well. And then, if you would support a relative who is, if you, for instance, have parents abroad and you support them financially, under certain conditions, you can also deduct that, but that also, again, has to be then documented, and you have to prove that you transfer the money and that they have a need for that financial support. So there are a number of additional deductions you can claim, but then needs to be substantiated with documentary evidence.
Sounds like there's a lot of things that you can deduct as long as you can prove it. I know from personal experience, you can also deduct renovation costs from if you're building or renewing a home.
Yeah, that's specifically for real estate. So yes, as I mentioned before, you have always also, if you say it's your own home, you will have to declare on the income side that self-rental income. But on the other hand, you can always claim also a deduction for maintenance expenses. And it's either then also a lump sum deduction, so it's a certain percentage of that rental income, depending on the age of the property. But if you have actual maintenance expenses, you can also claim a deduction for these funds. And this can be actually quite an interesting thing to do. It is maintenance expenses, and so because there is always a distinction to be made between what is maintenance and what we would call value adding investments that you do. So it's only the maintenance and the repairs that can be deducted for income tax purposes. The value-adding expenses. So we talked about the capital gain for real estate. It's then that it can come in handy. So when you sell your property and you realize a gain, and maybe it is because you build on an additional veranda or you installed a swimming pool or something like that, that you actually have a far higher sale price. And then you can offset these investments again, that gain that you will. So it's always good to keep the proof that you don't lose it, but they can't be deducted on an annual basis from the income directly.
Yeah, definitely an interesting one for me personally next year, because my renovations are ongoing. So we'll see how that works out. But because we are talking about property, let's stick with it. There are people who come to Switzerland and they keep their homes in their home country. So is there tax implications for someone who lives and works in Switzerland but has kept either a holiday home or a home that they're renting out in another country?
Yeah, so as mentioned before, so Switzerland has a concept of worldwide income taxation. So it is literally worldwide. So if you have then a property outside Switzerland, if you would rent it out, then yes, also the rental income of that property has to be declared in Switzerland. If you don't rent it out, it's the same as for a property that you would live in Switzerland. You also have to declare a deemed rental income. So that's also something that needs to go in the tax return. On the other hand, and also maintenance expenses can be claimed as deductions also for these properties that are located outside Switzerland. Even if you would be able to claim a deduction in the country where it's located, sometimes you still have to do a tax return in that country because it's then you have the property there and you have to declare it there. So also these expenses can be claimed as deductions in your Swiss tax return. The income itself, as I said, it's worldwide taxation, so you will have to declare it, but it will be not taxable in itself. It will be taken into account to determine the income that determines your overall tax rate. But the income itself will not be taxable. So it will be exempt from taxation in Switzerland, but will be taken into account to determine the tax rate determining income, as we call it. So yeah, it has to be declared, but with then also that concept of being able to deduct the maintenance expenses of these properties. Sometimes it actually has given you a benefit in Switzerland if you have maintenance expenses to deduct, because these expenses of that deduction is not exempt as well. So it's, there is a partly exemption, and that's now too complicated to go in there how it will all be calculated. But you can benefit on your Swiss income side actually from part of the deduction of these maintenance expenses relating to your property located outside Switzerland.
I think that's the kind of the point to remember is that if you have these issues that you're not sure about, there are very positive things about the Swiss tax system, like claiming the maintenance on a property outside of Switzerland that will help you.
Yeah, absolutely. But we need again there also the documentary. So you basically need an invoice that proves, yeah, basically that details what it is that you have done, and it's the date of the invoice that is important. So if you want to deduct the expense in your 2020 tax return, the date of the invoice has to be in 2020.
Okay.
31st of December, doesn't matter, but it has to be in the year. And then you can claim the deduction. Otherwise, you will have to wait until next tax return to claim the deduction.
Proof. That's what we need.
Yeah, and that's also the thing that you will learn in Switzerland. There's so many papers and information you will have to provide with your tax return. Some people don't do it. Even if we tell them, then you really need to do it. And so no, I'm not going to settle. But then you will get a question from the authorities. So that's how it works.
Keep every receipt.
Still a lot of
yeah. So the thing that I personally have noticed about Switzerland and the tax system is I'm from Australia, and in Australia, our tax year runs a completely different time to the Swiss tax year. So let's talk about when the tax year runs from and to, and when you actually have to make that tax claim and submit your tax return, because these dates are really, really important so that you don't miss deadlines.
Yeah, indeed. So the Swiss tax year is the calendar year, which I personally found the most logical system.
Yeah.
I know Australia, UK, there's a few countries out there that have a different tax year, which makes things less straightforward, let's say, especially if you're then in Switzerland and you need statements that close on the 31st of December. It's not always easy to get these, but it's indeed Switzerland is a tax year. So if you're here in Switzerland the whole year, so it's basically anything you have received through the calendar year will have to go into that tax return. That's from an income perspective. From a wealth perspective, there the value of the assets is determined on the 31st of December. So when you declare there the balances of the bank accounts, saving accounts, the value of your shares, that's on the last day, that's on the 31st of December. So therefore, sometimes it's indeed challenging for people with bank accounts outside Switzerland to really get that balance on the 31st of December because of, so where we usually say upfront, people just be aware. And maybe you have to get on your computer on New Year's Eve to get that statement out there on that day so that you have exactly the amount. But it is worthwhile to do it then and not to have to retrieve it a couple of months later. Because when we then look at the tax return filing deadline, so the first deadline in Switzerland is typically the 31st of March. Again, there are some cantonal differences. It's one tax return for federal, cantonal, community, and it's income and wealth all together. So it's one form that needs to be completed. Again, a lot of variations between the cantons of how these forms look like and how exactly the whole thing is structured. But the one common thing is that the first deadline is the 31st of March, which follows the deadline also for the federal taxes when the tax payments are due. Now, for filing the tax return, it's very easy to ask for an extension. So all cantons are very flexible in getting an extension. It's also quite easy, but in some cantons, it's you just can go online, ask for it, and it's fine. Other cantons require you to make a payment upfront to get an extension. So again, it's a lot of variations there depending on the canton. And also on the payment due dates. Unfortunately, this is also very, very different. It's not aligned with the tax return filing deadline. So although you say 31st of March is the first deadline for filing the tax return, which is also the payment due date for the federal taxes, it's not the same for cantonal and community taxes. So there are even quite a few cantons where the payment due date is already before year end. For instance, if you talk about 2020. So they say tax return is due 31st of March, now 2021. The due date, like if we look at now, for instance, Baseland, the due date was the end of September 2020 for the payment of the cantonal taxes. So it's a bit a strange system, which again doesn't really, if you pay taxes at source on the payroll taxes, it's not that much of an issue. But if you are paying, if you're a C permit holder or a Swiss resident, citizen, not having payroll taxes and these deadlines to make your payments from a cantonal and communal perspective are important.
So more the dates are for those payment dates are much more important to those who have to pay their own taxes. And the people with L and B permits where they're paying their taxes at source, the payment date doesn't really affect them as much because it's already coming out. But those dates that they must be aware of is that the year runs from the 1st of January to the 31st of December, and you have to put your tax return in by the 31st of March, unless you ask for an extension.
Yeah, exactly. There are also some cantons that give automatic extensions until the end of May, but there's so many variations on a cantonal basis that it's too complex to go into all these different variations. But
yeah,
if you have, say, 1st of March in your head, which is coming soon, then I think it's important and at least check whether it's applicable to you, whether you have to do something, and you're definitely still on time.
Yeah, exactly. The thing with pensions is that we could probably talk about them all day long, but because they have their own unique style in Switzerland. So you did mention earlier the pillars 1, 2, and 3. Let's just very briefly talk about that. We don't want to go into too much detail because otherwise we'll miss dinner and we'll be here all week. But it is a very extensive subject, something that is very important here in Switzerland.
Yeah, so it is indeed, as you say, you can talk hours about the system and about the details of the different pillars. But it is, I think basically Switzerland does have a 3-pillar system where you look at the first pillar, which is basically, it's a basic social security. The second pillar is the occupational pension or the company pension, and the third pillar is a private pension. The reason why it is built up like that by the Swiss government is the first pillar will cover your basic needs, which is means that everyone contributes to that pillar. So it's the AHV. If you're employed, it will come directly out of your pay slip. So there's employee contributions and then employment contributions, and you build up an old age pension. So which will you then also be entitled to when you retire at the official retirement age, whatever that will be in the future.
Yeah.
So, but that's the basic pension, old age pension that you build up in that first pillar. Then the second pillar is the occupational pension fund, is a company pension fund. So if every person who is employed is mandatory also contributing to a second pillar pension fund. So, and most employers, they go above what is required as a minimum coverage. So very often you build up there quite a nice additional pension in your company pension fund, both by contributing as an employee, but also the employer pays his contributions into the pension fund. So there you build up an additional pension savings, which will also be available to you once you retire at the legal retirement age. And then you have the third pillar, which is, as I said, a private pension fund, and this is completely voluntary. So this you don't have to get a third pillar pension. If you do, and it's structured as a pillar 3A, the contributions into that are limited, but they are tax deductible. Pillar 3B, there it's not limited, but the contributions contributions are not tax deductible. So that's the difference. But again, that third pillar is completely voluntary. It's a private pension. Sometimes it's linked to mortgage loans. So there's structured where banks require you to get a Pillar 3A because now it's linked to also as an insurance coverage linked to your mortgage. But that's basically how these three things are structured. First and second pillar are mandatory. Third pillar is voluntary. But it's all basically structured around making sure that you build up a pension which with the first pillar covers your basic needs, with the second pillar more or less ensures you that you can continue your lifestyle as you have now while you're working, and the third pillar is for anything extra. So
For extras.
And all your extras.
Yeah, and the reason that it is so important to mention those pillars is because, like you said, that some of them have tax deductibles.
Yeah, so well, it's all three. The contributions you pay into that are tax deductible. So the first pillar is then, as I said, is the one that comes directly out of your payslip. Also the second pillar, basically. So you will also have there the deduction for the employer pension fund directly, and they will reduce the income that is regarded as your taxable income. So they are tax deductible. With the second pillar, you even have the possibility, if you are in that situation, to make additional contributions on a voluntary basis. And within certain limits, they are also tax deductible, which also might be a very interesting way of reducing your overall tax liability. But it's something where you preferably could get some more advice. First of all, you need to know from the pension fund that you have the possibility to make these additional contributions, and then also whether it makes sense for you from a tax perspective, if that's the main reason why you want to do it. Because especially in the first year, depending on how your tax situation is, you might not fully benefit from the deduction, so it might make more sense to wait until you're a full year taxable in Switzerland. Plus the first 5 years, there also is limitation to how much you are allowed to pay into. So it's always good to get some additional advice on your specific situation before you do that. But it's something also, if you think about tax planning, combination of pension saving, building up your retirement savings, but in a tax beneficial way, it's definitely something to look into.
Yeah, so definitely, like we said, a complex part of the tax system in Switzerland, but also a super important one.
Yeah, and also I think what a good thing is in Switzerland is that, as you said, it's all tax deductible. So the authorities really want to encourage you to build up your own pension, so that you're not depending on the whatever there might be from a governmental pension perspective. So they really encourage you to build up your own, the second and the third pillar, and that's also why they give you then the tax benefits. There's also, that's a whole different topic which we'll not cover here, but when you get at the payment side, so when you retire, it's also, you can also get a beneficial tax treatment depending on, and also when you leave Switzerland, you can get it out. And so there's a lot of planning to do around pensions. And it's also when I mentioned in my introduction, this is also an area where we focus on it because it's such a big topic in Switzerland, and there is quite a lot possible in Switzerland around pension planning.
Right. So it is beneficial to talk to someone who knows what they're talking about when it comes to those very intricate details.
Yeah, exactly.
So we have a couple of questions from the Hello Switzerland community.
Okay.
You know, there's a lot of people out there who have American friends or are American themselves. And for me, I also have American friends. And one of the things that I do notice is that they have a very complicated tax system in Switzerland as Americans living here, but also that they pay taxes even though they're not in America anymore. Can you briefly talk about that?
Yeah, that's it's not the only country in the world, but it's one of the only countries in the world. still, even when you're outside the country and not residing anymore in the country, that you're still fully taxed as a resident there. So basically, you're still subject to worldwide taxation from a US perspective, and that's purely based on your nationality. So as long as you're a US national, you will basically be subject to worldwide taxation from a US perspective. So the only way to get out of it is basically surrender your US passport, which of course is a big thing to do. Although some people take that step and say, okay, that's the way to go. But again, if you just not to go on that route, but if you would consider that, also get advice, because it's not as simple as just giving back your passport. There might be also tax implications when you decide to do that. But yeah, it is indeed, if you're a US national, you will, as long as you are and as long as the system is like it is, you will still be subject to US taxes on your worldwide income. But of course, you are in Switzerland, as we said before, you are a tax resident in Switzerland here, and Switzerland also have the worldwide taxation for their residents. So you get into a situation where you have basically two countries that want to tax you on your worldwide income, which is of course not what you want. But the good news is there are what we call double tax treaties in place, and it's a treaty to avoid double taxation. And there is a treaty between Switzerland and the US, and in that treaty there are a number of ways that double taxation is at least mitigated, not completely avoided, but it's through a number of processes and mechanisms that it is mitigated. So from a US perspective, you will still have to file your US tax return, and you will still have to declare your worldwide income, but there are a number of, so you can claim a foreign income exclusion, you can do a number of other things to really avoid that you are double taxed. Now, having said that, on a Swiss perspective, nothing will much change. You will really say in Switzerland, I am a resident and I'm fully taxed here. An attention point for US citizens in Switzerland and also being employed with a Swiss employer and then contributing to a Swiss pension fund, as we just discussed. Although in Switzerland, the employee contributions are deductible and employer contributions are not taxable, the US doesn't recognize Swiss pension plans, and therefore the employer contributions into your Swiss pension fund have to be reported as additional income, and the employee contributions are not considered as tax deductible. So it's important to make sure that that side of your Swiss income is also reported correctly.
Very complicated for our American friends.
Yeah. We usually advise also to work there with a US tax specialist, and we have a few that we work with who also are familiar with the Swiss rules, because as I said, there's a number of specific things with Switzerland. So it's always advisable when you use a US tax accountant or tax specialist that you have someone who's also familiar with the Swiss tax rules. So we can always advise or recommend people that do know sufficiently the Swiss system to make sure that the US side is reported correctly.
And our last question is about the cantons, because we did talk about how there's so many in Switzerland, and they do have their own tax rates that they can pick. Is there a canton that is the best canton to live in regards to tax?
Okay, because I wanted to say it's not just about tax, which is the best canton to live in. They are the cantons with the lowest tax rates are typically in the center of Switzerland, because they are also It's actually pretty funny in Switzerland. There's a competition between the cantons to really attract companies mainly to their canton, because they bring in the tax money and they also bring down the employees, which then also become taxable. So it's a bit less now, because it's a less, I mean, cantons are a bit restricted in what kind of rulings they give to companies that are moving into their canton, but it has been in the past really quite a tough competition between the cantons to attract companies to their canton, basically. But at the moment, the ones with the lowest are Schwyz and Zug. These are the ones with the lowest cantonal tax rates for individuals. But also there you have to look into the communities, because sometimes with the combination of canton and community can give a different, if you only look at the canton, you get a different result than when you look at the canton plus the community. So then you can flip from one canton to the other, basically, if you look at both of them together. So but these are the ones with the lowest tax rates. But I always advise my clients, if you want to play around with it, and I don't have any shares in that company or any, but comparis.ch, you probably know that from if you want to have a health insurance or a car insurance. But they also have a very good tax tool. So to really just very high level, if you say, okay, I have 100,000 francs of income, what does it give me as taxes in this canton and community compared to that? And then you just get an idea. So it's quite fun to play around.
I was going to say, sounds like a fun game.
Yeah, and as I said before, it's impossible in Switzerland to say this is the average tax rate, this is where you have to live, because really every time clients ask us, I say, well, we really have to calculate it. So we have to have your income, your family situation, your deductions, canton, community, and then you will know. Otherwise, I can say, oh, it's there 15%, but it can be 2, 3, 5% more or less. So it's really impossible.
It's really an individual-based thing. That's what I think.
Yeah, because there's so many different factors that play into it, and plus it's also not like it's not banded, the tax rates. Like in a lot of countries, you go from 0 to 50,000, it's that rate. From 50,000 to 100,000, it's that tax rate. Then it's much easier. You say it's more or less, you're more or less in that band. If you look at the tables of the tax authorities, it's every 100 francs you have a different tax rate. So it's progressive, but it's in such a little steps that it's really impossible to say this is the rate that applies to you if you don't do a very specific personal calculation.
So we've covered a lot of ground today. There's always a lot more information out there. Karen, how can people contact you so that if they have more questions or if they would like to speak to you about their taxes, how can they get in contact?
Yeah, so we can be contacted through the Hello Switzerland portal. So there, if you go there in Hello Switzerland under taxes,